Should we buy or sell the advanced energy stock? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So I have a theme under the megatrends called smart cities. And one of those stocks is, advanced energy industries. They are in the smart grids business, 39-ish% from the 52-week low, and 4-ish% away from the highs. So here is the company's website. Advanced energy performance for demanding applications. So they engineer the world's most advanced power supplies and solutions for semiconductor and industrial manufacturers. Access the precision, power, and performance your applications demand. So plasma power generators, high voltage power supplies, thermal process products, low voltage power supplies. And here you can see, their entire portfolios, indoor environments, um, analytical instrumentation. I mean, pretty broad. So let's look at the charts. So this is the long-term picture, weekly data points. So this stock has been through a bunch of different moves, up and down, even during a bull market. So if you take this period here as an example from 2017 leading into 2018, minus 59%, then it had a bull market, then a bear market, then a bull market, then a bear market. So far, we have seen a very strong rally from this stock. We are blowing through some resistance levels. So this is resistance, and also back here. So this is it's a powerful move. But the issue, for new bulls is this a time to enter a new position or to wait? If you look here at the daily data points, we are seeing some exhaustion here in the candlesticks. So you look here on Friday, even though we closed higher, you do see here on the low end of the wick, we went way below. And on Thursday, we went substantially higher, only to close a bit in the middle. And if we look here at the weekly RSI and PBOs, you could argue that there's more fuel left long term. Looking at the daily data points, RSI, MACD, and the PBOs here are very elevated. We are overbought. Previous times we have been dabbling in this territory, like back, let's zoom in a bit. So the previous time would be back here. You see that we did initially go higher, but then we did see a very substantial pullback. During this rally here, we did actually stay overbought for a protracted period. So the situation we have here is, a breakout above prior resistance. If we look at some prior times where we have had breakouts with this stock, you could look at this breakout above this level. That was back here. So then you had a breakout, but then you did have almost a month of us going sideways. If we look at this breakout here as an example, so you have breakout here above this prior resistance level. So this is where you have the breakout, a couple percentages, but then you do spend 3 months pulling back. So basically this stock doesn't have a good track record of sustainable breakouts. The breakouts usually take more time. So you have a little bit of a push, then a pullback, and then you have the big move. So in my notes here, I write RSI and PPO resistance. I give the bears 2 here on the technicals. And on the long-term radar, I just write that for this stock, breakouts usually take time. Here is the seasonality for the stock. To the right here, we do see that in green over the last 5 years, blue over the last 7 years, and red over the last 10 years, we usually see some weakness heading into the 26th of August. That is when you see some substantial strength into the late part of September, before there is a bit of a pullback. And to the left here, we do see that over the last 5 years, August and September are substantially weaker than July, Over the last 10 years, a similar trend. And then over the last 20 years, you do see that from, August into September, seasonality is usually rather weak, but then October comes with a vengeance. So I give the bears -4 here on seasonality. Let's look at the fundamentals. So SACS has a number 3 hold here, C value, C growth, and C momentum. Industry rank is in the bottom 29%, semiconductor equipment, wafer fabrication. Market cap 3.5 billion US dollars, and there's a tiny dividend here of 0.42%. When we go to insider activity, we do see that the latest move was a sell, and that was from the global sales executive vice president, and the person who is involved with sales, they know a lot about the business. So that's a bit bearish. If you look here at market screener, and we go to the consensus estimates, we do see that 11 analysts are covering the stock. The average price target is 9.48% above us. Highest is 27% above, but the lowest is minus 10-ish% below. So what would a 9-ish, 10-ish% move mean? So from this level here, yeah, so a 9-ish% or 10% move, it wouldn't lead to any kind of breakout. It would just push us into like this cluster of prior resistance levels. So basically, the analysts do not think that this stock warrants a new all-time high. There were some mixed signals here on the fundamentals, but I do give the bears a bit of an edge here with a -1. Let's look at relative performance. So the long-term correlation with the S&P 500 is 73%, 76% positive with the industrials ETF, XLI, 73% with the XLK, which is the technology ETF, then 89% with the ICLN, which is the clean energy ETF. Looking at the daily data points, 75% with S&P 500, 76% with industrials, 81% with technology ETF, and 46-ish% here with clean energy. So long and short term, the strongest correlation we do get is actually with the XLK, like that. So what happens with the XLK is going to have the biggest effect on AEIS. So here are the weekly data points. We have seen quite a few weeks now in a row of a rally for the XLK. So that is a strong move. Let's look a bit here at the daily data points. Yeah, so we have pushed into some potential horizontal resistance levels. So you can see that back here, there is resistance, and also back here, and there's a bit of a cluster over here. Let's look at RSI and the PPOs. So the MACD sent a buy signal here. You could still argue that there's more fuel left here on the RSI and the PPOs long term. On the dailies, we are elevated. So the distance from the green 50-day PPO and also the purple 20 daily moving average PPO, we are at risky levels here for the bulls, levels that have marked prior highs. But looking at RSI, there could be a bit left. You see that there's a tendency for RSI to become a bit overbought before we have that typical pullback. Here I am comparing advanced energy against the technology ETF on the weekly data points. And we do see that there is some tendency for us to have these time cycles. The duration of the time cycles have differed, but these time cycles capture a lot of price action, generally speaking. So there could be a rising phase in development. We are in the higher end of RSI here, but more often than not, during uptrends, advanced energy has outperformed XLK a bit more. So let's look here at the seasonality for this pair. So in green here over the last 5 years, blue over the last 7, and red over the last 10 years, we usually see advanced energy underperform into the 29th of August, but then we see a strong outperformance here into the 29th of September. Here is the relationship between the technology ETF and the S&P 500. So there was the risk of us forming a pretty substantial head and shoulders pattern. However, the right shoulder now is higher than the left shoulder. So this head and shoulders pattern is in the process of becoming neutralized, which is, bullish. Um, yeah, I mean, this is some pretty constructive action. Uh, the head and shoulders pattern is not completely gone yet. It is possible to have a head and shoulders pattern where the right shoulder is higher than the left one. It's just that the probability of that head and shoulders not working out for the bears is much higher. So let's look here at the seasonality. Yeah, so if you look here over the last 5 years in green, 7 years in blue, and 10 years in red, we usually see technology underperform the S&P 500 into the 10th of August, and then we do see some outperformance. So I do give the bulls here a 4 on relative performance. Nonetheless, we do end up with a score here of minus 0.8. The key issue here that is beneficial for the bears is that the RSI and PBO is at resistance on the daily data points. Also, the seasonality is not that good really for the months we are into. On the topic of clean energy, let's look at some other candidates in this entire space. So now I'm just going to scan through some charts in order to make a decision. We would of course have to do a deep dive. But here is energy fuels. They are in the nuclear energy business, and you can see that the blue 100-day moving average has been very viable in the past. It's also been shortable. Here it was very shortable, and now we are testing it again as resistance. So in all likelihood, you will have bears putting on some shorts at this level, but the bears will have their stops a bit above that resistance level. So if the bulls were able to push above the 100 a day, then quite a few bears would close out their positions just automatically. Here is first solar, definitively seen an extremely strong move. The 200-week moving average in red definitively was very viable, and yeah, it's been a monster move. And this is in all the likelihood due to also a short squeeze. You can see here, if we go to the daily data points, is that the blue 100-day moving average, it was a very clear resistance level. Super easy for the bears to short, but then there was a bit of a plot twist where you see that multiple days the bulls were able to close above it and also use it as a support level. And when you had these, especially this breakout above horizontal resistance as well, you saw a very strong move here for first solar. Tesla definitively in the clean energy space. Maybe the daily data points, yeah. So on the daily data points here, you can see that the red 200-day moving average, it has been important as support back here. Here it become resistance, support. So now there is a bit of a war around that moving average. So the bulls were trying to get above it, but then the bears fight back here strongly. So this is definitively a battle zone. Um, when a moving average becomes a battle zone between the bulls and the bears, then it can become rather frustrating to trade and very difficult. So I prefer clean trades where you have a clean support or clean resistance level. You can see that the 200-day has been very difficult to trade recently. And that is just the key thing about being into the markets, is that it's much easier to just have a clean trade. It's the same thing if you are going to go on a bike ride. It's easier to get from A to B if you have a very clear road to travel on. If it's very jagged, a bunch of potholes, then it's going to become much more difficult, obviously. So it's the same logic in the market. You just, if you have the option of picking an easy trade versus a more messy trade, then why would you pick the messy trade, you know? But yeah, whatever you do, of course, you do definitively want to be a bit market neutral in this market, and go to diamondarm.com to get access to even more data.